在 YouTube 里面。
就做播放，就是
名字。All right. Hi, everyone. Welcome to today's live stream. I'm Her Daily Trades. And we've got a jam-packed session ahead. We're diving into the latest market movements, tech rallies, and of course, keeping an eye on the NASDAQ 100 and some of the hottest growth stocks like Snowflake. So whether you're a seasoned investor or just getting into the market, there's something for you in today's discussion. For those of you who are returning from any of my previous lives, welcome back. And those of you who are just tuning in for the first time, welcome, and I'm so excited to have you here. And as always, I want to hear from you. Drop your thoughts down below, questions, or any stocks you're eyeing in the chat. We'll get to that too. Now, let's get super excited and let's kick things off with the broad market overview. US markets finished the week strong. The S&P 500 was up around 3 to 4%. While both Nasdaq Composite and the Dow Jones made solid gains too, but the real driving force behind the rally, it was investor optimism surrounding a potential interest rate cut by the Federal Reserve. So let's look at the. Let me open up for you. And We're seeing a lower volatility with SCBOE volatility index or the VIX dropping, signaling calmness in the market after a busy holiday week. So overall, it looks like there's a bit of a risk on sentiment right now, but will it last? We'll dive into that. Now let's set our focus. Now, where is all the action happening? You guessed it right, if you are thinking of AI. With massive momentum around artificial intelligence, big tech companies are leading the charge, and names like Meta, Nvidia, and Tesla are really grabbing the headlines. Let's look at Nvidia. So these are this is the drawing from my previous live. I think what I mentioned of the rebounds is quite accurate. While I also want to take a look at Meta. While Meta had quite a big jump yesterday. So, and guys, let me know, do you think AI will continue to drive these stocks higher, or are we due for a pullback? Let's chat about it for a moment, guys. Do you guys think stocks will go higher in the AI sector, or do we think we're already due for a pullback? So, as mentioned in yesterday's live, where we analyzed Tesla and then other stocks as well, let's look at it one more time. So, our target line is still the 455. Currently, yesterday, the highest close was 454.53. So I did not get the confirmation I wanted to see. However, it's going there. We see how it goes, but currently just keep an eye out for the 455. It's still my target. Actually, we're seeing some really interesting trends here. Tech, AI, and mega cap stocks have been a major driver of market strength, but we've got an eye on earnings report because we've seen before tech stocks can be extremely sensitive to any sort of bad news. So if you're holding anything in this space, make sure you're watching those every earning dates closely. So now let's go back to the NASDAQ. So let's look into some of the technical analysis for NASDAQ. So what we've been looking at, let's recap. Ever since April of 2025, after the downtrend, we have been seeing an upward trend. We've also so as we take a look into NASDAQ, I want to analyze what we're seeing in December and as well as overall. So ever since April of 2025, we've been in ever since mid-April to the end of April, we were in an upward trend for the NASDAQ 100. However, right now, I would say might be entering a ranging stage, but let's see. So the Nasdaq as of early of December, it's currently hovering just under the 25,580.50 area, and after a pretty sharp drop in mid-November. So after this sharp drop in November, nearly 9% fall from its peak. We're seeing a 9% fall from its peak here. It is what many analysts call a recovery mode. So what might have this been a recovery mode? It bounced back towards the end of November and is now hitting in a technical key zone. So, I would suggest a good line to pay attention to be here if you're looking for a good buy-in around the 24,800. However, maybe don't put all your positions there. You can put a percentage of your positioning just to protect yourself in case there is any news or dangerous scenarios. So for all my traders out there, we know markets can be unpredictable. If the broader market economy throws us a curveball, say a weaker than expected global data or more rate hikes, this could even go higher. So now what we should be waiting for NASDAQ is paying attention to what will happen next week. While tech is leading, don't sleep on other sectors. Consumer, retail, and energy are also in the spotlight, especially with the holiday spending ramping up. You've got Black Friday, Cyber Monday, which just passed, and we've got Christmas, New Year, and the retail season is really heating up. So, that said, energy markets are a little bit of a mixed bag right now, with oil prices fluctuating based on global supply, demand shifts, and then there's the global macro risk factor, geopolitical tensions and economic slowdowns, and any surprises in major economic data. So, how do you feel about this global uncertainty? I know it's been a big topic lately. Let me know if you're feeling bullish or cautious. Comment down below. All right. Thank you for the feedback. Now I want to move on to something so exciting and something so interesting. Can you guess what I want to talk about? Yep, it's Snowflake, guys. So, now let's take a look at one of the most standing out stocks, Snowflake. It's been making waves lately. And what do I mean by that? Let's see the overall report. So ever since I'm not gonna go into December this time. However, I will go to this year's low, which was in April. Ever since then, we've been in an upward trend with a few, with little, I would say, significant but important pullbacks. So now let's take a closer look at Snowflake. What we were looking here is what is range up. And right now, after what I would say many people probably sold at this level, that's why we're looking at a healthy retrace. And it's been making waves lately, especially after its recent composite rating upgrade. The stock is holding above its 50-day, 100-day, and 200-day moving averages, which is a great sign from a technical standpoint. We're also coming to a cross here. However, we got to be cautious. While the long-term trend remains bullish, short-term oscillators are showing neutral signs. So if you're trading SNO, watch out for key support zones around $252 to $255. If we see a drop to those levels, so what I would recommend is between 252. Let me just align the key levels that I would be watching out for. One would be 255. I'll put it on this. One of the key levels I will be watching out for, and another one would be 200. Between this, sorry, 252 to 255. This would be a good entry phrase. I'm not going to type, but that's going to be a good entry phrase. If we see a drop to those level and it holds, it might be a solid buying opportunity. However, if it breaks below 230, let's see, if it breaks below the 230, which I would, let me see, put here first. If it breaks below the $230, that's something to watch closely for a potential weakness. Although it may be unlikely, but it has to be watched closely, because if it were to retrace to here, that may be an indication for a possible weakness. So, all right, that's enough talking from me. I want to hear from you all. What are you thinking about the NASDAQ 100 rebound? What are you guys thinking about this rebound right here? Comment down below. I want to know. Actually, this was quite a significant rebound. I hope you can have some answer, really. For me, in my opinion, this rebound, it's shaping up to be an interesting few weeks with some big decisions ahead. As always, make sure to keep an eye on those economic data points and earning reports coming up. Financial year is ending, we gotta pay attention. So, let me tell you about NASDAQ now. The index of November 2025 is currently in a sort of a recovery mode. After shaping after shaping a mid-month drop. However, it rebounded towards the end of the month, right here. The dip and the rebound were within what many analysts considered a healthy bull market correction, and the index now trades near a technical support zone. Despite volatility, the underlying longer-term growth thesis for Nasdaq 100 remain intact. Many of its consistent companies benefit from ongoing trends in technology innovation. It's especially around AI, semiconductors, software, and other digital adoptions. Do you know why Nasdaq 100 matters? And do you know what drives it the most? So the Nasdaq sharply responds to shifts in severe macro and micro factors. One of them would be interest rate expectations and monetary policies, because many of its firms are growth oriented and rely on future earnings. So lower interest rates or an expectation of rate cuts tend to lift valuations. Conversely, rising rates usually pressure valuations. So do you know what are some of the rest of the reasons and what drives Nasdaq to make it move? Let me have a sip of water and we'll continue. So, number 2, innovation and sector concentration. Its heavy exposure to tech, software, and semiconductors and growth-oriented sectors means that trends like AI advances, cloud computing growth, new product cycles often drive big swings. Earnings result from big constitutes performance of major companies in the index can sway the overall index. Strong earnings from tech or consumer tech firms tend to lift the index as well. So because many Nasdaq 100 companies earn global or depend on global supply chains and demand, currency moves, global demand cycles, trade tensions, or shifts in global growth sentiment also impact the index. So do you know what to watch for? Do you know what's risk and what could go wrong? So currently, high expectations are built in. If interest rates stay elevated, or if economic growth disappoints, valuations could come under pressure. So especially for like growth-oriented firms. Another one, Nasdaq 100 is tech heavy. The concentration increases risk. If the technology or consumer tech sector underperforms due to regulations, earnings disappoint. Competition, supply chain problem, the index could underperform. Broader, more diverse indexes. Let me just pull up one of the news here. So, U.S. stock futures today. S&P 500, Nasdaq trade higher in big tech, metal, and Meta, Nvidia, and Tesla active in early trade. Nvidia drove Tesla macroeconomic. So before I continue with this, I'm gonna make it small. So next, other thing that could go wrong is many constitutions have significant overseas businesses. A strong US dollar, global demand weaknesses, or bad geopolitical events could hurt it. So, as seen in November, a sharp downward trend, sorry, a sharp downward though and rebound can happen quickly, all in the matter of days, which can be stressful for short-term investors or those with higher income needs. So, what I'm watching. With the recent rebound and stabilization around key support levels, especially the index could attempt to reclaim some of its prior highs, especially if macro conditions or interest rates, inflation, and global growth remain supporting. So, earnings season for big tech growth companies will be critical. Strong earnings could re-energize the index, while weak results might trigger more volatility. So, one more thing, especially inflation, interest rates in the US, and global growth indicators will likely shape the short-term to medium-term trajectory of the Nasdaq 100. Given the tech innovation tilt and any major technical breakouts, as I mentioned in AI, semiconductors, or cloud, or even regulatory developments could disproportionately impact the index. I wanted to show you this as well. Before I want to jump back into Snowflake because this just came out. So currently, Snowflake tops 96% of all other stocks in terms of key performance and metrics and technical strength. Oh, my Snowflake back. One moment. Snowflake. So, Snowflake is within a buy range from a 255 entry point, an ascending base. They also posted 94% increased rate earnings in quarter 2. That means now generated 3 straight quarters of rising EPS gain. Top line growth increased 32%, up from 26%. In the prior report, the revenue increases. The company next quarter report is expected around December 3rd. So that was 2 days ago. No wonder there was a spike. Let me see, December 1st, 3rd. No wonder. Okay, oh, I want to take this. So I think the Snowflake is currently projecting bullish supportive signals. Many moving average indicators, short-term and long-term, point to buy. Snow is trading above its 50-day, 100-day, and 200-day average. And several momentum oscillators and technical indicators may summarize and show strength. One recent technical summary puts Snowflake in a strong bull buy. So for the long term, if any of you are long-term holders for Snow, the 200-day average is rising. This is a traditional sign of a sustained uptrend in no longer time frame charts. So the relative strength appears strong. Some technical rating services rank it among the stronger growth stock candidates currently. I would say currently for now, the Snowflake is growing really well. It's looking bullish. me one moment. Let me have a sip of water. So let's look at the near term support. If it drops to this zone, could be a buying opportunity. It will be 252 to 255. I would put, let me put here, 252 to 55 near term. This would be a good buy-in opportunity if it holds. So for the midterm, let's see where I would put the midterm. I would put it about the same place I put it earlier, which will be the 230 to 235. So, but this is the stronger base support. Failure below may suggest weakening of the larger uptrend. If it's not able to hold here, I would watch up. So, and for my third support for long term, I would, let me think. 205 would be too low. However, it is the 200-day MA. So this is a long-term headline. I'm not going to insert it here. For my resistance level, I would put around 270 to 275. A breakout above this zone could signal a renewed upside momentum, fresh highs. Let's see the volume. If the price dips to 252 to 255 support zone, this could be a dip buy opportunity, assuming the volume holds up and overall sector sentiment remains stable. A sustained move above 270 to 275 with a strong volume could open the door to a continued rally, especially if the macro sentiment and the AI cloud software themes stay strong. However, a break below the 230 and 235 zone could be a more concerning that might indicate a weakening uptrend or a potential shift towards consolidation or deeper correction. So what this means, given where SNO currently sits, well above major moving averages, in a generally bullish technical environment, its chart looks supportive, especially for a medium-term investor or trader betting on continued growth momentum. That said, because SNO tends to be volatile, high growth, and high expectation stock, it's particularly sensitive to news, earnings, and macro sentiment. Using technical levels, support, resistance, plus moving averages as anchors for any trade is prudent. In short, technically bullish, but with a watchful eye on support levels and potential volatility. What do you guys think on SNO? Any of you guys here are SNO holders? Comment down below. I want to know, and I want to know what you guys are thinking. Do you guys think Tesla will hold up? Any comments down below? So my take and what I'm watching, given the mix of factors, rate cut expectation, resilient tech schemes, but also mixed global macro signals, the setup feels cautiously optimistic for this year and this quarter. The market seems to be pricing in a soft landing scenario. Growth holds up enough to justify equities, but inflation cools and the Fed becomes a bit more investor friendly. We got those rate cut expectations starting to build up as well, right? You can feel it in the air. People are betting that the Fed's gonna start cutting rates sooner than later. But here's the kicker. It's not just about that. We got resilient tech themes still pushing strong, AI automation, big distributors. Those are fueling a lot of optimism, even those valuations are getting pretty stretched. Yeah, I see you. Some of you are like, yeah, tech way overbound. I got it, trust me. But the growth is still there, especially if AI starts living up to all the hype. So it's a balancing act. Some sectors are really firing while others are still trying to find their footprint. Now let's see the bigger picture. When I zoom out, I see that the market is cautiously optimistic right now. I mean, we're all watching those mixed global macro signals, right? Some things are looking solid, but other parts of the world feel shaky. So geopolitical tensions, supply chain headaches, inflation in some regions. So it's not a clean story everywhere. But here's the thing. What the market seems to be pricing in is the soft landing scenario. Think about it. Growth holds up enough to justify equities staying afloat. But inflation cools off and the Fed, well, they start becoming a bit more investor friendly. You know what I mean? The Fed's not going to be aggressive with rate hikes. Maybe they even pause or cut. This means that the market stays supported while inflation doesn't completely eat away at our gains. That's the sweet spot everyone's hoping for. And it's definitely not a given, but it's what the market is betting on. Yeah, I see some of you guys in the chat. Do you think we're really gonna get a soft landing? It's definitely a tough call. It's all about watching the signals. If we see that inflation drop and growth hold up, I think the market's gonna keep that cautious optimism rolling. But hey, we're all just trying to piece it together, right? The market's been on a wild ride and no one has a crystal ball, but that's what I'm watching right now. Rate cuts, resilient tech, and soft landing in play. All right, that's my take. What are you watching? Drop your thoughts in the chat. I'll be reading through and diving into some of your questions. I want to know what you guys are think, what you guys are betting on. Guys, thank you so much for interacting with me today. Thank you for joining this live. I hope you guys liked it. I hope you guys stayed along. I hope everything what we talked about piqued your interest. And if not, I hope you learned something. And if not, I hope you commented, share with me what your opinions are. And if you're a new watcher, thank you for joining in. If you're someone who's been along the ride with us, thank you for coming back. And thank you for staying tuned for this live. I hope to see you guys in the next one. Goodbye.